Hey, welcome. So today we're going to break down a financial product you might come across while planning for retirement, the Heritage Growth Advantage Fixed Indexed Annuity. We're going to look at how it's presented as a tool for long-term growth, but with a major focus on protecting your savings from those big market drops. All right, let's just jump right in with a question that, is probably on a lot of your minds. You've spent your whole life saving up, building that nest egg, but as you get closer to retirement, the game changes. How do you keep that money growing without putting it all on the line in a volatile market?
You've got this classic dilemma, right? On one hand, but there's the stock market. Yeah, it's got huge growth potential, but it also comes with that stomach-churning risk of losing a big chunk of your money. Then on the other side, you have the super safe options like CDs, but their growth is usually so low it can barely keep up with the cost of living. And that balancing act, well, that's what we're calling the retirement tightrope. It's this tricky challenge of trying to capture some of that market upside while making sure the savings you've worked so hard for are shielded from major losses. It's a huge focus for anyone nearing retirement. So the big question is, how do you even walk that tightrope? Our source material points to a potential middle ground solution, and that's where the fixed indexed annuity, or FIA, comes into the picture. It's designed specifically to try and find a balance between those two extremes we just talked about.
So what is a fixed indexed annuity really? First off, and this is super important, it is not a direct investment in the stock market. It's actually an insurance contract. The core idea is that you can earn interest based on how a market index, think something like the S&P 500, performs. But, and here's the kicker, it also comes with a guarantee to protect your principal from market losses. And this really gets to the heart of the whole thing with a quote from our source material. Zero is not a loss. What does that actually mean? It means if the market index your annuity is linked to has a bad year and goes down, your account value doesn't follow it. You simply get credited 0% interest for that time. Your principal and any interest you've already earned is protected. Okay, but how does the growth actually work? Because it's not like you just get whatever the market gets. The interest you earn is figured out using a few key things, like what are called participation rates or caps, which basically limit how much of the index's gain you actually receive. Let's break that down. Okay, this is probably the most important thing to get your head around. Your money isn't actually in the market. It's just linked to a market index. So when the index goes up, your account gets credited with a piece of that gain. Now, that piece is set by things like a participation rate or a cap, but if the index goes down, you get that 0% floor we just talked about, no loss. This little table does a great job of showing you the trade-off. Let's just walk through it. Say the market index shoots up 10%. If your annuity has, for example, an 80% participation rate, your account would get credited 8%. You don't get the full 10%, but you get most of it. Now look at the flip side. The index drops 5%. What happens to your account? Nothing. You get credited 0%. You don't lose a dime. Okay, naturally, any financial product like this has its own set of rules and, fine print. So let's get into the guarantees this particular annuity offers and what kind of flexibility you have. First thing to know, this is definitely a long-term play. It's not for money you might need next year. When you get one of these, you choose either a 7-year or a 10-year period where surrender charges would apply if you pulled out too much money. So it's really designed for funds you can set aside for a while. Now here's a feature that's pretty interesting. For that entire 7 or 10-year period you pick, the crediting structure, so those participation rates we just talked about, is guaranteed not to be reduced by the insurance company. That gives you a level of predictability that you just don't get with a lot of other products. But even though it's a long-term thing, it's not like your money is completely locked away. There's some flexibility built right in. After the first year is up, you can usually take out up to 10% of your account value each year without any penalty. The source material also points out that things like required minimum distributions, or RMDs, are penalty-free, and there might even be a waiver if you need the money for nursing home care. So when you put it all together, who is this kind of annuity actually for? Who's the ideal person for this product based on what we're seeing in the documents? Let's run a little litmus test. This checklist really clears things up. This is probably a good fit if you have a long-term mindset and you're okay with setting money aside for at least 7 to 10 years. A huge one is if safety is your #1 priority. You care more about protecting your principal than squeezing out every last bit of market growth. It also helps if you have other money for emergencies and if you're looking for tax-deferred growth, where your earnings can compound without you paying taxes on them every year. And this right here is an absolutely critical point. You have to understand that an annuity is an insurance product, not a bank product. So unlike your savings account, its guarantees are not backed by the FDIC. They are backed only by the financial strength and the ability of the insurance company that issues it, in this case, Investors Heritage, to pay its claims.
So at the end of the day, this whole thing really boils down to one fundamental question for you to think about. It's the central trade-off here. Is that promise of complete safety from market downturns worth giving up some of the market's potential growth on the upside? That's really the core question to ask yourself if you're ever considering this kind of tool.